So tonight we are going to be discussing about market order. Yeah, so I'll be sharing my screen quickly. All right, so earlier on we were meant to even discuss this particular topic on Monday, but we happened to discuss the one we were meant to discuss today on Monday. So it's still almost like the same thing, okay?
Okay.
So markets market order are those order whereby the trade goes immediately at the best possible prices. Okay. So,
Okay.
and this, when we talk about market order, we have two types of market order, which is the pending market order and the instant market order. Even by the name alone, you already know that one is going to happen almost like immediately. You get my
Immediately,
point?
instantly. Yeah.
Exactly. So the instant market order is always going to happen almost immediately,
Okay.
whereas the pending order is something you have to place and go about your business for the day and hope that whenever it gets to your area of interest or your point of interest, the market is just going to have to execute almost immediately, you know. So, with that being said, I'll be discussing the instant market order first before we start talking about the pending order. Okay. So, and
Okay.
in the instant market order, right, we have um, the buy market order and we have the sell market order. Did you get that? We have what?
Okay. The
The
buy market
buy market
order,
order and the sell
sell market
market
order.
order. So if obviously you can see the screen, so buy market order is actually straightforward. So it's more of you just clicking the buy button either on your MetaTrader 5 or your broker, depending on where you're trading the currency pair that you want to take trades on. Okay, but most
Okay.
times I would always advise people to, you know, fund your broker or fund the amount you want to fund with the broker that is reliable, just like Exness, Just Market, Handtech,
And
and
tech.
so on and so
Okay.
forth. Yeah. So once
Okay.
you fund it, all you need to do is you go to your MT5 and whilst opening an account with either Xnest, Handtech, or Just Market, because these are like the reliable brokers that I would always recommend for anybody who is going into the business of Forex, right?
Okay.
So you try as much as possible to subscribe to the MetaTrader 5. We have two types of MetaTrader, the MetaTrader 4 and MetaTrader 5, but I prefer the MetaTrader 5 because the MetaTrader 5 is actually user friendly. Is that clear?
Oh, yes,
So
sir.
once you have set up your account with any of these broker on their MetaTrader 5, all you just need to do is to pick up the username which you've been allocated to and your password which you also had to
Oh, to
put
create.
in your to create exactly for yourself. And once you impute it on the MetaTrader 5 with that particular brokerage, because you're going to have to find the brokerage on that MetaTrader 5. All the brokerage in the world is in that MetaTrader 5. All you just have to do is type in the name
That's
of the
for the broker.
brokerage in the chat, yeah, in the search button, and it's going to pop up your desired brokerage, which you subscribe to, and you put in your login details, and boom, you're going to be seeing exactly how much you deposited in that brokerage. And from there upwards, you begin to trade
Great.
whatever currency pair you have in mind, or whatever precious metal you have in mind, or whatever crypto pair you have in mind, depending on whether the brokerage is offering any of these services I've mentioned. So that is that about it. So whenever you want to take trades, that is when the buy market order and the sell market order should happen almost what? Immediately. Okay.
Okay.
So the buy market order is when a trader wants to execute a particular order almost immediately. So let's say I ask you, let's even assume I'm calling out a signal for you and I'm asking you to take a buy on GBP USD right now. You see, that is an instant order I've given you,
Oh,
right? So you're going to
yeah, yeah.
definitely click a buy at that point in what time? And even if I give you an instant order to sell GBP USD, you're going to click on the sell almost what? Immediately.
Instantly. Yeah.
Are we together?
Yes, sir.
So that's it. So if you look at my screen, you're going to see where I also gave instances of GBP USD. Suppose the bid price is 1.2052 and the ask price is 1.2050. Okay. So assuming that you want to buy the GBP at market price, your Forex order will go in instantly and you will have what? A long position in GBP what? USD from what? 1.20 what? 52. And you know that bid price is the price that the market is willing to sell to you, right? Whereas ask price is the amount that you're willing to buy. But since you want to buy almost immediately, you have to go with the terms of the person who is selling to you. Abi no be so?
Yes.
Good. So at that point in time, it is the price that the market gives you that you just have to go with at that point because you're buying at what? Impulse. But the impulse you're buying at is the best possible what? Price because it might not even come down to 1.2052 again, let alone even 1.2050, which you're bargaining on. Are we together?
Okay. Yes,
So
sir.
so that's it about buy market order. And so also it's applicable to what?
Sales
The sell
marketing.
market order. Okay. So let's say you want to sell GBP USD and the best possible price for you to sell is given at 1.2050. Again, you're going to have to execute almost what? Immediately because that is what the best possible price. Is that clear?
Okay. But I have a question, sir.
Yeah. Ask your question.
How will you know when the market is bidding to sell and bidding to like ask? You said like example now. Let's suppose you're buying GBP at the bid price is 1.20. How do you know the bid price is this and the ask price is this?
Good. Now, ask price is when you're trying to buy at the best possible low price. Okay? So whenever you go to the market, what you're asking for is what we call the ask price. So if I'm selling a jeans and you come to my shop and you say, how much is this jeans? Right? And I tell you 5,000, right? The
Mm-hmm.
price which you want to buy it from me is what we call the what? Ask price. So you can tell me 2.5, right? And I'm telling
Okay.
you my last price is 4.5. At the end of the day, if you have the 4.5, are you going to buy it from me or not?
Definitely, I'll buy it if I like the gym.
Good. If emphasis on if you like the gene,
Yeah,
which most times you figure out that for you to have even picked it on the first place, you already like that
the
particular
gym.
gene,
Okay.
right?
Okay.
So you're
Yeah.
definitely going to buy at impulse as long as you know you have the money, right? It's only when
Yeah.
you do not now like that particular gene or that you don't have the money, that's when you walk away, right?
Yes,
So,
sir.
by the end of the day, you might come back for that particular gene and it won't be sold for 4.5 again. It's either it's going for something higher or something lower. So it's a 50-50 what chances, right? If the price comes down, you see it's now in your favor. But if it goes above the particular price which you met it for on the first day you came to the market, you see now you have to dip hand into your pocket to add extra money just to secure that particular jeans. Is that clear?
Yes, sir.
So that is that about it. So the next one we are going to be talking about is stop loss, take profit, and trailing of what? Stop loss. After these
Plus
three items I've just mentioned now, we are now going to be discussing what? Pending orders. And in that
pending
pending
order.
orders, you're going to get a picture or a perfect idea of how traders execute in the foreign exchange market.
Okay.
Okay.
Yes,
So,
sir.
first of all, I need you to understand that your stop loss is almost as good as the amount that you're willing to risk in a particular trade. Is that clear?
Okay. Yes, sir.
Yeah. So let's say you're risking $100 in one trade. Your stop loss has to go in tandem with what? The amount you're what? Risking. Reason being that if your capital or if what you, yes, if your capital is $1,000 and you're just taking out a fraction out of that $1,000, which is $100, you're just risking $100 out of the $1,000. Be rest assured that if you take that $100 risk and market goes against you, there's no how market will infiltrate into the extra $900 you have left. Are we together? That is the reason
Okay.
for what? A
Stop
stop
loss.
loss.
Stop loss.
And the reason
Okay.
why the stop loss is there is so that even if you're not watching the trade at that point in time and it goes below $100 or it goes towards the $100 breaking point, it's just going to take you out of the market automatically, leaving your current balance at what?
$900.
$900. But imagine
Okay.
if you did not put a stop loss, what will most likely happen to that account? Is either is
Everything will
wiping
go.
out good, is either is wiping out everything you have in your account, or is either it is eating
It
deep
is
into what
increasing.
your yes. So you
Okay.
see now it's more like unforeseen extra charges.
Circumstance.
So that is where proper risk management comes into what? The picture, right? So for you to be risking $100, you've told yourself that I would have to take 10 trades before I lose out my complete what? $1,000. Is that clear? And the
Okay. Yes,
idea
sir.
is that for every time you're risking $100, always envision to make at least times three of what you're risking. So times three of what you're risking is what? $300. I mean, no be so.
Yes.
So at the end of the day, when you risk $300, when you risk $100, sorry, and you make
Mm-hmm.
$300, you see you're at the side of being a profitable trader. Now your $100 is intact plus extra $300. That's a total of what?
$400.
$400. $400 plus the $900 that was already like your balance because you were already risking what? $100, right? So putting back the $100 makes it what? $1,000 plus the profit you've made. That is a total of what?
1,003.
$1,300. So you can agree with me that if I lose three trades in the foreign exchange market, it takes one good trade for me to make it back.
Back.
Are you with me? And that's because I understand the art of what? Proper risk management. Are we together?
Yes, sir.
So that's it about what? Stop loss. Sorry. Now, going to take profit, I already even explained take profit with the stop loss. The profit you're looking for to making is what? Times three of what you're what? Risking. Is that clear? So that's your what? Your take profit is $300, but you're risking what? $100. Are we together?
I'm kind of confused there. Is it like it is compulsory that you make times
Is
three of
not
it,
is
or
not is not compulsory. You might make higher. But I'm just saying
okay,
that most times market would even move in your direction times three. Most times. It's possible it can even move 1:2. But the best you can go for is keeping it at a minimum of 1:3. Is that clear?
yes, sir.
If you see 1:2, you take it. If you see 1:3, you take it. If you see 1:4. But for someone like me, I always envision for
New
1:5. Okay? One is to what?
Okay,
5. So if I'm
fine.
risking $100, I'm always looking for that high probable trade that will give me times 5 of what I'm risking. Is that clear?
Yes, sir.
And the highest I can go is times 10. So if I'm risking $100, there are trades that I could even hold for 2 to 3 days. But at the end of the day, I'm going to secure $1,000. Does that make sense? By risking what? $100. Is that clear?
Yes, sir.
So that is that about what? Taking
The profit.
profit. And this take profit, it varies. Each and every one of us have a risk appetite. There's a certain profit you see from a trade that you've actually taken, and you're comfortable with the profit and you exit. Is it not true?
Mm-hmm.
I might see 300 and I'm not comfortable. I'm not yet satisfied. I know the market will still go higher. And I'll do what? And I'll turn a blind eyes and wait for the market to do what? To come up a little bit more. Is that clear? But for someone
Yes, sir.
like you, you might just see the $300 and you're already satisfied and you close out what? Because that is how you've wired your psychology. Once you're just okay with the profits you're seeing, you 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 go with it. Okay.
Okay.
Now, the last but not the least on these three items I just listed out is what? The trailing of what? Stop loss. Now, trailing of stop loss is when you move your risk to your entry point. You might be wondering what am I talking about? So there comes a point when your trade is moving in your direction or moving as you speculated or predicted, right? The appropriate
Mm-hmm.
thing for you to do as a trader is to move your stop loss above your entry point. Now, what do I mean by that? If you were risking $100, right, and market has given you $200, right? The best thing you can do is to do what we call break even. Okay? Break even is your ability to move your stop loss to your entry point. Okay, so what is that your entry point? Your entry point was what? 1.2052 in GBP USD. Is that clear?
Yes, sir.
And maybe that your $100 stop loss was somewhere around 1.199 1.998. That was where your stop loss was. So you now changing the digit of your stop loss from 1.998 to 1.2052. You're automatically telling the market that even if the market decides to reverse and come back into my entry point, it then means the market will break me at what? Even. And break even is a scenario whereby you did not make money and you did not lose your $100 capital. You did not make money, you did not lose money. So it's giving off that energy of he who fights and run lives to what? Fight
Fight another day.
another day. So your capital is intact. Your $1,000 is in what? Tact. You did not make profit. You did not lose money. So
Okay.
that is the importance of what trailing stop loss. And there are also periods where, okay, this particular trade of yours has even gone as far as what? $400 in profit. Now you move your stop loss from even that entry point a little bit above. So your new stop loss will no longer be that 1.2052, but it would even go as far as 1.300 or 1.3102. Do you understand? So even if market decides to reverse against you, you're probably having $100 profit home that you're going home with. Your capital is intact with a little profit that you're also going home with. So the market broke even the market broke even with a little profit, which you were able to go home with. So entirely you didn't lose out of the market. Is that clear?
Yes.
So with that being said, the next topic we are going to be
Sir.
treating is
But I have a
what?
question there, sir.
Yes, ask your
I have a
question.
question. I have a question there, sir. This
Ask your
trailing stop
question.
loss. This trailing stop loss. Is
Yeah.
it advisable
Well,
to
it is, but for someone like me, I always like to stick to if I lose $100, I lose it. If I make profit, I make profit.
make profit? I
Uh,
think that is
because
better because it looks like
there are also days where market can come and act funny and still go back in your direction. So at that point in time, it takes you out on a break even, and you might not have the urge to want to re-enter that trade again. Are we together?
okay, yes, sir.
And there are
So
also
you
days where,
from your
uh,
sorry, sir, from your own experience, sir, you are a trader.
yeah,
Do you
yeah,
take how often do you take this trailing stop loss?
I do it mostly on Fridays, because markets are just somehow on Fridays, you know. So
Okay, they are
whenever
unpredictable, abi?
yes, people are already taking out the profit they made from Monday till that Friday. It's just like how this year started as of January. By sometime around ending November, beginning December, people will start pulling out whatever profits they've made from any investment they invested in, right? And that
Yes,
will
yeah,
lead to
yeah.
market acting so choppy and unpredictable because a lot of money have been withdrawn from what? From the system. Is that clear?
Yeah, okay, yes, sir.
So
I get it
market is
now.
going to be unstable within that period of time.
Okay. Because me, I just see that trailing stop loss has been too controversial because if you're already making profits, then why do you not want to like increase your stop loss so that you can make more or lose? Then you not eventually losing and you're now going back to like your foundation, like your initial account. I see it as being dubious or something. I don't know. You might call it ojukokoro. I don't know.
Well, wisdom is profitable to direct. Any day you enter a trade or a setup which you analyzed and you're not so confident about it, your spirit is either going to tell you to what? Trail your stop loss because you're not so sure about that particular trade. But anyone, your spirit already gives you so much conviction from the analysis you've done that it will most likely go in your direction. There will be no need for you to also trail the stop loss at that point in time. So some of these things, you also have to use logic on your own. Not everything is being taught in the classroom. Some are just best for you to experience and learn and tweak things on your own way. You
Okay, that
get?
is where the sentiment analysis come in.
Exactly. Beautiful. Beautiful.
Okay. Okay. All right.
Yeah.
Thank you, sir.
You're welcome. So talking about the next stage, which is what? The pending orders, right? Even by the word pending, it's something that has to be waited for. Something is what? Pending. So a pending order is an order which you place and patiently wait for the market to come to your point of interest or to your best possible price in the market. Is that clear?
Come again, sir, please.
I said a pending order is an order you place at a particular area of interest or price point where you expect the market to come to at a
Get to and
particular,
start trading.
yes. So, and
I
most
get that.
people who place pending orders are people who already understand what their strategy is all about and how it works, right? So if they are also busy people who have other businesses and they are not always seated by their laptops to always watch the market movement, all they just have to do is place their order in that particular price point and go about their business. So what the market does for you is automatically, once price arrives within that region, it executes your trade almost immediately. Is that clear?
Yes, sir.
So that is pending order. And in pending order, we have 4 types of order. We have the buy stop order. We have the sell stop order. We have the buy limit order. And we have the sell
No
limit
limits order.
order. Are we together? So
Yes,
these are
sir.
the 4 orders we have, unlike the instant market order where we just have what? The buy market order and the sell market order, which
Order.
happen what?
Mm.
Almost
Instantly.
instant.
Instantly.
Exactly.
Yeah.
Yes. So we are going to be starting with the buy stop order. Okay. So the buy stop order is an order placed above the current market price. Did you get that?
Another place above the market enterprise.
The buy stop order is an order placed above the current market price. Placed
Okay,
above.
place above.
Yes,
Okay,
above the current market price. Yes, that's the buy stop order. Is that clear?
but I think it's more clear. You can explain this chart for me. I can get it on this
With
chart.
the chart, good. So
Yes, sir.
now, but you understood the definition I gave, right?
Yeah. I understand. Yeah, I
Beautiful.
just like check chart. Yeah.
So it's an order placed above the current market price. Now, if you look at this chart I'm showing you, can you see these red dotted lines?
Yes,
Can
sir.
you see where my arrow is pointing towards?
Yes.
You can see
1 point.
1.24330, right?
Yes, sir.
That is the current market price. That is where the price is currently. Okay?
Okay. Okay.
But now your order is placed above that current market price. So your order would not activate until price comes and activate it. These candles begin to move up. Once the candle comes into this zone, it would automatically activate what? Your
Your
trade,
trade.
which you've placed at 1.2450.
Zero.
But as long as price does not come to 1.2450, this buy stop would not be what? Activated. Is that clear?
Yes, sir. Yes, sir. Okay.
So that is what? Buy
Buy
stop
stop order.
order. An order that is placed above the current market price. Did you understand that?
Yes, sir. I got that.
So with that being said, the next we are going to also be looking at is what? The sell
Sell stop
stop
order.
order. Beautiful. Now, what is this sell stop order? The sell stop order is just an inverse of the buy stop order. Okay. So the sell stop order is an order placed below the current market price. Okay.
Okay.
Below what? The current
Market
market
price.
price. Now, let me even digress a bit. Okay. You can see that this is a GBP USD chart, right?
Yes.
Now, all this green candle you're seeing is used for identifying the base currency. And the base currency in this currency pair is GBP. Is that clear? The
Yes.
base currency pairs are the pairs located on the left-hand side or known as the first currency pair, whereas the quote
Which is
currency
GBP.
is the currency pair located on the right-hand side, known as the second currency. So the quote currency is the USD, and the red candle signifies what? The quote currency, whereas the green candle signifies what? The
The
base.
GBP base.
Good. God bless you. So for every time the green candle pushes to the upside, it means the economy of the GBPs is doing far better than the USD. Are we together? And
Yes,
anytime
sir.
you start seeing more red candles than green candle, it means that the economy of the USD is doing far better than what? The GBP.
The
And trust me,
GBP.
investors are more concerned about what? Buying into a
Yes.
currency that is doing far better than the other one. So if the GBP is doing very well, I'm just going to sell off my dollar and start buying into what? GBP. And if USD is doing better than GBP, I'll sell off my GBP and be buying into what? USD. So it's as
USD.
good as saying I'm a chameleon. I do not belong to this particular place, but any place that it's all about winning, that's where you're going to find me in.
Mm.
Okay. And even as an investor, you should know when to leave a trade and move to the next one. And that is where I always say wisdom is profitable to direct. Don't always try to be greedy. Know when to leave the table. Is that clear?
Yes, sir.
So in this case now, you can see that the reason why we are having a sell stop is that we are already anticipating that the USD will start doing far better than the GBP
GBP.
currency. And the reason why we
Okay.
also placed the GBP, the buy stop, is that we're already envisioning that the GBP would keep doing far better than what? Than the
And the US.
USD. Did you
No, no,
get?
no. I think it's the other way around.
Eh?
Or do you think it's not the other way? I think the USD is doing better than the GBP. That is why we have more red candles coming down.
Yes, but in the case of the GBP doing far better than the USD, it means we are having what? A buy
More green.
stop. A buy stop is favoring the GBP, while a sell stop is favoring what? The USD.
The USD. Okay.
Is
Okay.
that clear
Okay.
now?
Yes, sir. Yes, sir.
Because sell stop is telling you that the momentum is in favor of the USD, but
USD.
buy stop is telling you that the momentum is in favor of what? The
GBP.
GB.
Okay.
Good. So that is that about sell stop. Then the next one we are going to be talking about is what? The limit orders, where we have what? The
The
buy
buy limit
limit
order.
and the what? Sell
Sell limit.
limit. Okay. So the
Yes, sir.
buy limit gives you the best possible price. Just have that one at the back of your mind, first of all. The buy limit does what? Gives you what? The best possible price.
Price.
Okay. So it's just like you want to buy this commodity for 1,000 naira and maybe currently it's selling for 50,000 naira. Now, if we have 100 people that want to buy this commodity, right? And at the end of the day, this commodity can be afforded by only 4 people at that 50,000 naira. But the rest of the 95 people can afford it at 1,000 naira. What do you think price is going to do?
It's either if four people can buy it at 550,000 and 96 people can buy it at 1,000, I think the market will not move at all because more people are not buying it.
So what will happen to the market? Is it going to crash or not?
It will crash definitely because it's not
So
moving
it is going to crash to that 1,000 people, to people who can afford it at 1,000 naira.
at 1,000.
If you know your demand and supply um algorithm very well, or you have the knowledge of demand and supply, you know that when the demand is high, what will happen? The
When the
price
demand
of
is
that
high,
particular, when the
the price will
demand
be
is
high.
high, when the demand is high and the people who are buying at that particular demand is low, what is going to do? Price is definitely going to crash
It will
to
crash.
the level where people can be able to afford
They
that
can afford it.
particular commodity. Is that clear?
Okay. Yes, sir.
Good. But when the demand is high and a lot of people can afford it at that particular high price, it then means there's no chance for someone who is bidding below that particular price point. And that was why I
Okay.
gave you the instance of a commodity which you can only afford at 1,000 naira, but then it is sold for 50,000 naira at the moment. You cannot afford it at 50,000, and 94 other people plus you, 95, cannot afford it at 50,000. It's just only five people that can afford it at 50,000. So what do you think market is going to do? Market is going to drop drastically to 1,000 just so that
1,000, yeah.
that
So people can
particular
buy it.
commodity is sold out. God bless
So,
you.
yeah.
You see the logic behind it.
Yes, sir. Yes, sir.
So
Yes, sir.
forex trading is not just all about charts and the rest of them. You have to also be what? Logical in reasoning. You have to be a critical what? Thinker. You have to always have that business mindset. If this does not work, what's the next thing? You push your moves like a chess player. Okay?
Yes, sir.
So a buy limit order is an order placed below the current market price. If you look at this chart now, you can see that the current market price is at 1 point what? 24330. But where we are looking forward to buying this commodity is at 1 point what?
2170.
2170. Yeah. So you're trying to buy it at a low price. And you know that whenever people buy stuffs at a low price, especially if they are into retailing or they also sell, would they sell for that 1,000 they bought it for?
Mhm.
They will not sell it for the amount they bought it for. As a matter of
Yeah.
fact, you'll be shocked that they will sell it for 20K. Something they bought for 1,000 can go as high as what? 20K, because initially the price was 50K, right? And what happened?
Okay.
Price had to come down
Price
drastically.
like come down to 20K.
Good. So imagine where you buy something for 1,000 and you're selling for 20K and even above 50K. So different people are going to sell that commodity differently. I hope you know,
Yes.
especially when it begins to get even scarce, right? The more scarce it gets, the more high the price of that commodity is going to be. I hope you
Just like
know.
petrol. It's just like petrol now.
Exactly, exactly. A lot of filling stations have just locked their rails, you know. So the few ones that are selling, what do you think is going to be happening? They will be
There will
selling
be
at a
high
high,
high price.
exorbitant prices.
Yeah.
Good, good. Let's not even talk about people that would already put a certain price amount that they've not loaded on your car just to scam you of a 10,000 naira difference. You know, there are people who do that.
Yeah, I know.
So,
Everybody is just sharp.
and then finally, we have the sell limit order. So, The sell limit order
It's
is
just
an
like the
order
opposite of the
of
buy limit
buy
order.
limit. Yes, you want to sell at a high price because you bought at what? A low price.
Right.
So it's always good for you to sell out your commodity at the best possible price because the point comes where the price will start going down because that commodity now that you think you're the only one that has is beginning to become rampant again. So the earlier you
Mm.
sell it off, at a best possible price, the better for you. And you even stand an opportunity to buy it again at a low price, you know. And this time around, if you were able to afford that commodity, if you're able to afford four of that commodity, because of the profit you've made for selling the four of them, you can be able to even afford eight of it or 10 of it right now, whenever you're buying again at a low price. So it's giving off the rinse and repeat kind of rule, you know. So that's it about what sell limit
The limit
order.
order.
Is that clear?
Yes, sir.
So at this juncture, we are going to have to call it a night. Okay. It was
Okay,
nice
sir. Thank
having
you.
you on here and
Ah,
see you on Friday.
all right. Thank you so much for your time, sir.
You're welcome. All right now. Good
And
night.
have a good night's rest, sir.
Yeah, you too.
Thank you, sir.
Yeah.